Well, our base case is always early 16 for the US. However, we're pragmatic and in the market interprets September's a possibility, the end of this year's a possibility, but we were very dismissive of June being a possibility. That was the point from the beginning of the year. And it's a context of how they raise rates. If you go towards a 1994 scenario, and you don't make it very clear with a narrative and the communication of why you're raising rates, how high you want those to go, and to be very specific in that you're just trying to do small adjustments and long pauses. If they don't get that communication narrative correct, it'll be in 1994 where people obviously had 7 rate hikes for the Fed, and you had a very disastrous year for equities in 1994 from an annualised basis, and that was coincidentally in line with the bond market having a negative return, which is very, very rare to do. So we believe that when they do start that narrative, it's going to be carefully communicated and within the markets, because clearly a lot of people say they're behind the curve. And you can sit there and say it's all about the data, but it's all about stability. They're just looking through that. And then the implications of that will be lower Aussie dollar, all things being equal, which is playing out, most of it's played out. And that lower Aussie dollar, all things being equal, I know it's not a good way to reward Australian shareholders because as an aside, you need more productivity gains. But all things being equal, a lower Aussie dollar is accretive to earnings in the ASX 300, and that will eventually filter through, because as I would probably say, it's a lazy way for Australia to become more competitive, but it means better bottom line revenues for the ResMeds and the CSLs and the Ansels, even Macquarie Bank, even, dare I say, Computer Share. That seems to be frustrating in the way it does its cost outs, but even can add value for those sort of companies that are global exposures.
Does the US rate cycle have an impact on what happens for the RBA?
In part it does, they won't say that, but it's the largest economy in the world, and how they dictate that narrative from the Fed and Yellen in the months ahead and years ahead, it's vital for all markets and stability. Markets just need to be spoon-fed a little bit. They need to be meeting expectation in part. They don't need the surprise from central banks. There's enough surprises outside of that cycle. But in essence, global central banks are very pragmatic central bankers. They understand that they need to communicate. They understand that they're doing a lot of the work and burden versus, say, the fiscal side of things globally. So they've been innovative in the past since the GFC. It's been to the benefit of markets and stability. They need to maintain that, and communication's part of it. It's a bit unfair that the central bankers have to do all this work, but clearly democracies and voters don't want to take on that burden, and they are limited. And there's a regulatory sort of regime as well going on in the background that you need to be cognizant about. But getting back to the central bankers, it's vital that they are very systematic with clarity, and they really have a clear narrative of where they're going and why. And to make it clear that any rate rises in the US, it's all about being very, very, very measured, and they're obviously behind the curve, and that's a good thing for markets.